Welcome to Wealth Science. I'm your host, Jesse Fuchsia, Army Ranger, real estate investor, and income enthusiast. On this show, we uncover the keys to attaining financial freedom. There are so many people listening right now who are stuck in that day-to-day 9-to-5 rat race. Luckily, it's only temporary. Each week, we bring on guests that help us discover the steps to build financial freedom, passive income, and generational wealth, so we can live the life we were born to live. Money is freedom. Let's get to the show. All right, welcome back to another episode of Wealth Science. I'm your host, Jesse Fuchsia, and today's guest is Jimmy Song. Jimmy is a Bitcoin developer, entrepreneur, and educator. He has been in the space since 2011, and his main goal is to bring sound money back into the world again. Last week, Jimmy sat down with Senator Ted Cruz to talk cryptocurrency. This week, he's sitting down with me. Wealth Science. I bring you Jimmy Song. Jimmy, welcome to the show, brother. Appreciate you taking time out of your super busy schedule to be here.
Well, thanks for having me. Yeah, it's kind of crazy how everything is during bull markets, and we were discussing right before the show just how insane everything gets, and I feel like it's going to get even more insane in the next 6 to 8 weeks.
Absolutely. So, Jimmy, for people maybe who don't know who you are or have never heard of you, I mean, if you don't mind just giving yourself an introduction on where you're from, where you grew up, and how you kind of got to today.
Yeah, I'm just sort of like a typical coder. I've been a programmer since I came out of college in 1998 from Michigan. I was a math major when I was there, and basically I've been doing startups ever since I came out of college. Starting with the first one with a friend from high school, and I've been doing this for a long time. Lots of coding, and at every level, from like tweaking JavaScript to make the UI look nicer, to tweaking, database queries to make it run faster, stuff like that. So I've been in all sorts of industries, healthcare, e-commerce, like everything, right? Like I've just done a ton of stuff. But I got into Bitcoin about 10 years ago, 2011. And I think I was definitely very well positioned to receive it because I am a very technical person. And I tend to lean very libertarian. So when I heard about it and saw the 21 million limit, it was definitely kind of like fish taking to water, right? Like it felt very natural to me. Not everyone has that experience. Most people tend to have as their first sort of like instinct, this is a scam, something's wrong with this. How can this be? This seems like a fad. But for me, when I saw it, 21 million limit, knowing what I know about cryptography and things like that, it just sort of clicked. And I've been in the space sort of as an educator in many ways. I've written 3 different books. I've been, working with in different capacities. I've taught a class at the University of Texas. I've been an expert witness in Bitcoin related cases. So you can say that Bitcoin has pretty much taken over a lot of different aspects of my life.
Yeah, I mean, that's incredible. And it's cool to hear your whole story on how coding was kind of, your beginning journey and how you've kind of gotten into this. I'm curious. I mean, 10 years ago in 2011, what was kind of the thoughts around, cryptocurrency, and where exactly was cryptocurrency in 2011? I'm curious kind of the history behind it.
Yeah, I mean, even the word cryptocurrency didn't really exist in 2011, at least when I got in. Literally, there was just Bitcoin, and that was it. And the first altcoins came out later that year, around August or September, with I think like IX coin and Geistgeld and all these other things that no one has ever heard of. Like if you come in the last 5 years, you have no idea what those things are, because they've more or less gone away. And this is something that I want to emphasize, is that there is Bitcoin and there is altcoins. And Bitcoin is a very different animal. And altcoins have much more in common with fiat money, with US dollars, with the euro, the yen, than it does with Bitcoin, because they are really, really centralized, not just a little centralized. In fact, I think I could argue that they're even more centralized than the US dollar is, which is kind of saying something. But ultimately, what it was like back then was it was kind of known as like drug market money, like as the internet plaything that maybe some techno libertarians kind of liked or something like that. But like it had a very different sort of feel than it does now, certainly with like the store value narrative and everything else. But things have changed drastically since 2011. Like it was a big deal when we get like even a mention in any sort of like mainstream news or cultural thing. Now that happens like multiple times a day, every day. So very, very different environment that we're in. Certainly kind of wish I were back in those, early days so I could buy more Bitcoin, but, obviously that's not coming back.
No, I mean, that's awesome. I mean, I love that, what you said there at the end. It's a great way to look at it. I'm curious when you talk about this, and I follow all your content, the concept of centralized versus decentralized and how powerful it is to have decentralized. Could you just kind of expand and kind of explain that to viewers out there who might not understand that concept?
Yeah, so centralized means that there is a central controller. You need permission from somebody to do almost anything. So the US dollar is a highly centralized currency. And there's some obvious ways in which it's centralized. So for example, if you do something that the government does not like, they will likely take your bank account away. So if they suspect you of being a drug dealer or a child pornographer, or I don't know, I'm sure it's going to be like unvaccinated people or domestic terrorists or something like that very soon. They can and do take away your bank account, censor it in some way, or make it very difficult for you to access your money, if not impossible. It's a single. It's a permission system essentially, and even right now, you may think, okay, well, I can take my credit card anywhere and do whatever. There are lots of things that your credit card won't let you do, and in fact, if your credit card gets stolen, one of the weird things that it does is if you happen to buy sneakers and gas within like 30 minutes. The second transaction will likely not go through. And it's kind of a weird thing, but that's something that they've identified credit card thieves as doing. So they just sort of prevent it altogether, knowing almost immediately, this credit card is probably stolen because sneakers and gasoline. I don't know why that is. But regardless, the whole concept of centralized is that you have somebody in control. And particularly this is true of inflation. And this is the monetary debasement that's happening on a continuous basis and has been since pretty much its inception, 1913, with the Federal Reserve. A lot of people think that inflation is like 1%, 2%, 3% a year, and that we're sort of like historically abnormal right now at 5% or something like that. It is nothing of that kind. It is way higher than that and has been for a very long time. One way, the classical definition of inflation is monetary expansion rate. The rate at which it's expanding compared to the current stock and the new flow of money from the central bank. And if you measure the M2 money supply since 1959, in 1959, the entire stock of M2 money was of US dollars was $289 billion. Currently, it is somewhere around 20 something trillion dollars. That is an insane increase. So if you annualize that, that ends up being about 7%. And not coincidentally, that's about the rate of growth of the S&P 500 or the Dow Jones. It's kind of amazing how well they correlate. So that suggests that a lot of the monetary gain of these stocks is actually very illusionary, right? Like illusory rather. It's not really there. It's just sort of keeping up with inflation, and it's really only the technological advances and the capital created by all of the entrepreneurs that are out there that have made the purchasing power sort of keep up relatively better than the rate of monetary expansion. So, that's a way in which centralization really hurts everybody, because they're in essence stealing value from everyone else in order to fund whatever it is that they want. And this is happening at every level, government, big businesses, and of course at the retail level with mortgages and so on. But it is happening at every level. And what we have with centralized things is that because there is a central money printer, it causes all sorts of incentives to go completely wacko. So you have, for instance, all these like vaccine mandates being promulgated through society. At the federal level, you could kind of understand it because you work for the government. You're going to have to do what the government tells you. But we're starting to see that spread out to other sectors. So, for example, the airline industry. I don't know if you heard about what's going on with Southwest Airlines right now. They can put pressure on these airline industries because why? Well, Southwest took $25 billion in PPP loans that they don't have to pay back. So essentially, as a result, now they have to pretty much do whatever the government says. Money becomes a means of control, and it's no coincidence that the fifth plank of the Communist Manifesto is state control of money and no other money allowed, and that is part of what the U.S. government has certainly done, and what every government around the world seeks to do, whether with the IMF's blessing or not. Usually, if the IMF comes in, you have to have a quote unquote independent central bank, which generally means that the IMF can put pressure on that body and not have to go through the legislature or something like that. So ultimately, what you have is something that's very permission, where wealth can be stolen away from you very easily. You need permission to do almost everything. That's what centralized is. Decentralized is like the opposite. It's something that doesn't have a central controller. So gold, for example, is decentralized. If you own some land, say, like I could go dig for gold in my backyard, and if I find some, then I can sell it. It's mine, right? Like I don't need anyone's permission to go dig for gold. But if I start printing $100 bills in my backyard, I will get arrested by the Secret Service very, very quickly, because that is illegal, and you're not allowed to do that. So that's the big difference. And the thing about decentralized commodities and decentralized money in particular is that it tends to be much more market driven. And as a result, you get to store your value a lot better. And gold held that role for something like 5,000 years until they started rehypothecating it in all sorts of ways and doing all sorts of weird, financial derivatives off of it, lots of naked short selling, fractional reserve banking, which has more or less suppressed its price in the last 50 years or so, in one way or another, and has, and thus it suffers from its inability to sort of break out of this jail that central bankers have more or less put it in. So Bitcoin represents something completely different in the sense that it is digital and decentralized. So fiat currency is mostly digital, right? Like your credit cards, you're doing transactions digitally all the time over the internet and so on. But even at the grocery store, most people don't pay in cash. If you're paying with a credit card, it's all done digitally. They debit your account if you're using a debit card, and credit the merchant and so on. It's all run sort of very digitally. And that's why people use dollars and not like ounces of gold to go and shop at the grocery store. So it has that sort of convenience factor, but the dollar is terrible at storing value over the long term. Gold, on the other hand, is terrible for doing like everyday transactions and so on. But it does store value rather well, right? Like if you measure wealth in terms of ounces of gold, even with all the manipulation that's going on, you've done relatively well since like 1970 or so. But Bitcoin gives you sort of like the best of both worlds. It's convenient because of its digital nature, and it stores value even better than gold because of its scarce nature and its decentralized nature.
Yeah, I mean, there's so many important points in there. I mean, the level of decentralization, the power of being able to store wealth. I mean, it's the credit side of it. It's so important. I don't want to gloss over. And you mentioned something in there. And for people who don't know what exactly fiat money is, in my opinion, fiat translates to what I would call, and I don't know if you agree with this, so please tell me if you don't. Almost like fake money. I don't know if you have a different translation or what exactly is fiat money for people out there. I'm curious.
Yeah, so fiat is Latin for "let there be." So, like the first sentence in the Bible is "Fiat lux," "let there be light." Right? Like that's that. It's the idea that you command something into existence, and that's what fiat money is. It has no backing. It just correlates to sort of currency that somebody makes out of nothing, right? Out of thin air, and this happens all the time in the fiat monetary world where, money is just sort of created. With something like hard money, it's hard in the sense that it is hard to produce. So to produce a new ounce of gold is extremely difficult. I'm told that you need to process something like 40 tons of dirt and rock to find 1 ounce of gold. And this is at a gold mine site. So it's a tremendous amount of effort that goes in and work that goes into producing that ounce of gold. Whereas with fiat money, it really literally costs nothing. It's a number in some database somewhere. And if the government wants to send out stimmy checks to everybody for however much money, it happens all day long and for whatever amounts that they want. And there's no real resistance. I mean, there are statutory limits that Congress has put in with like deficit ceilings and everything else. But I mean, as we're seeing with like the stupid $1 trillion coin stuff, there are ways around it, and there likely will that dam will likely break, and they'll just print money up the wazoo, like to whatever number that they feel like. But ultimately, what you have with fiat money is this ability to create money out of thin air and have absolutely no work behind it, and that's been the case. At least in the United States since 1913, in European countries much longer than that, in other countries maybe shorter than that. But that's what every country in the world pretty much runs on right now. The US, at least nominally, was on the gold standard where you could convert dollars to gold up until 1971 when Nixon cut the ties to gold and sort of temporarily suspended its convertibility. It's never been able to come back from that. That was 50 years ago, and it's still quote unquote temporary, but it's never coming back. Back then, it was like the price of gold was like $30 an ounce. It's not coming back.
Yeah, I mean, I totally agree. I don't think people understand the implications from all these stimulus checks and all this liquidity that's being injected into the economy, not just on an international, but also on an international level. I mean, every time they do that, they're diluting the US dollar and making it even more worthless. I mean, do you agree with that? Do you disagree? I'm curious.
Yeah, definitely agree with that. And the thing is, it's diluting it for absolutely everybody in the world. Like the settlement currency for international trade, it has been the dollar since Bretton Woods in 1944. And if you don't know about Bretton Woods, it was basically a bunch of bureaucrats that got together from all around the world that got together in a hotel in New Hampshire called Bretton Woods towards the end of World War II as a way to establish a new world monetary order. Those are their words, not mine. Essentially, they wanted to have a new monetary order over the world because they realized with central banking and all the stuff that happened in World War I and World War II, largely because of the monetary policies that these countries were able to do, you had such absolutely devastating wars that happened largely due to the fact that countries can spend money that they didn't have, right? Like they could just confiscate the wealth of everybody in their country and use it for purposes of war, which is why both wars were so incredibly devastating. If you think about World War I, for example, it was the heir to the Austro-Hungarian Empire being, shot by Serbian separatists. Like that should not have gone to the degree gone crazy to the degree that it did, but it did because everyone could escalate as a result of fiat money. You could just print money to pay for everything, and when you want to win, you just sort of get bloodlust or something, and everybody just keeps going. But towards the end of World War II, they realized something was wrong, and they needed to establish a new monetary world order, and that's when Bretton Woods came along. And at that conference, it was clear that the U.S. had way more leverage than everyone else, because at the time, the balance of payments in international trade was always settled with gold. So if the U.S. gave more supplies to England, and England only gave a smaller amount, the trade deficit was settled in gold. So the U.S. did that with pretty much every country around the world, and they got like a large stock of the world's gold within their borders at that time. So they had enormous leverage because the world was on sort of like a pseudo gold standard at the time. So they said, you know what? You can't have gold in your vaults. You're going to put dollars in, and whenever you want to convert, you'll be able to. But So the US basically got to make everything based on the dollar. So because of that, and after 1971, converting that to the petrodollar system, where everybody that wants to buy one of the most important commodities in the world, oil, had to use the dollar to buy it. Almost all international trade is settled in dollars, something like upwards of 90%. So that means that everyone uses dollars. So what does that mean? That means that whenever the US dollar expands, it means all of those people suffer. And this is not just central banks, which of course suffer. And they usually pass it on to their citizens by expanding their own currency and making their own citizens suffer. So every time the US steals from them, they end up stealing from their own people. So it's sort of like a game of musical chairs where the people that get screwed the most are the people in third world countries. But it's also at the retail level. A lot of people in third world countries will store their value in the dollar. And this is everyone from Nigeria to Venezuela to North Korea. One of the things that is absolutely shocking to me is that the North Korean black market, the most desirable currency in the North Korean black market is the US dollar. And and then it's the euro, then it's the Chinese yuan. But everyone wants the dollar because it is the most liquid currency. And the thing is, every time the US dollar expands, money is being stolen not just from US citizens who at least hypothetically have some say, because you can at least vote in the president who can appoint the Federal Reserve chairman and so on. But it's stealing from those people, right? The poorest, most vulnerable people in the world. Every time the money expands, those are the people that are stolen from, and it's sick that these people who have no recourse suffer from that. So to give you a very practical example of what this all means. We know that we had stimulus checks, PPP loans, and all this other stuff in the US. And of course, a lot of people in the US benefited, but people in other countries have not. So notice, for example, that Turkey has 40% annual inflation. They're going to hit hyperinflation fairly soon. Lebanon has been doing the same thing. They're probably going to hit hyperinflation pretty soon. But prices in the North Korean black market, they've doubled. And those are the people that suffer as a result. So because you got your PPP loan, because you got your stimmy check, the people in North Korea, in Venezuela, in Nigeria, they're all suffering. And most people don't think about money this way, as if we're all connected, but we really are. Every time you expand the monetary supply through these government programs and many other ways, by the way, including your mortgage. So every time you get a mortgage, you're expanding the money supply because those loans do not come from someone else's savings. They are printed into existence on your behalf. So all of this is happening everywhere. And this is inflation at a global scale. This is theft at a global scale. And until you recognize sort of the culpability of every single action that is happening, you cannot, politicians make it seem we're just sort of kicking the can down the line. And even the best politicians will say, we're leaving this debt to our children. No, what you're doing is stealing value from the poorest citizens, poorest people in the entire world. And that is, those are the backs on whom that you are, getting to play Xbox for 12 extra weeks because you get an unemployment or something like that. And that's what's happening. And we need to come to terms with this and really recognize what's going on. Otherwise, it's just going to continue, and the politicians are going to continue to deceive you, and you're not going to know that you really are causing all of these people to suffer.
Yeah, I know we spent 15, 20 minutes on centralized versus decentralized and fiat money, but it's so important to the Bitcoin conversation and how it kind of sets that base and why Bitcoin is such a phenomenal investment and one of the best investments you can make. So I apologize we spent so long on that, but it's so important, Jimmy. You knocked it out of the park. To kind of bring it back towards Bitcoin now, and again, I'm a novice Bitcoin investor currently, but for the people out there, could you just define exactly what is blockchain? What is Bitcoin? What is DeFi and stuff like that? Just those three terms.
Yeah. So blockchain is basically ledger. It's a distributed ledger. That's all it is, and it's a ledger like at your bank. If when you deposit, money at your bank, what they don't do is put the $100 that you deposited and put it in a drawer marked with your name. That's not how it works. They put the money in the vault and credit you $100 on their ledger. And whenever you write a check to somebody else, they debit your account and credit their account. They don't move money from your drawer to their drawer. Like that. You're kind of doing that at like sort of like a metaphysical level and not like the physical level. That's what a ledger is. And basically, Bitcoin is one giant ledger, and that ledger is called the blockchain. And you could think of each page in the ledger as a block, and each page points to sort of a previous page. This is why it's called a blockchain. It's like each you have many pages of this ledger, and the new page is added essentially every 10 minutes. So you have the entire history of all transactions that have ever happened on Bitcoin in that ledger. And this is every transaction that's ever happened on Bitcoin since 2009. So 12 years of history. That takes up about 300 gigabytes on a normal hard drive. And that contains every single transaction. But that's what a blockchain is. A lot of people tend to sort of like make it seem like it's much more than it is, especially hucksters that want to sell you something. But that's what a blockchain is. Now, what is Bitcoin? Bitcoin is that ledger system, and it's got a very clever way of making sure that it is decentralized, and as in there is no central controller, and there is sort of this emission schedule so that there's a guarantee of there never being more than 21 million Bitcoin. And the way that's achieved is through something called the difficulty adjustment and proof of work. I can explain both of those, but that gets a little bit technical. But basically, within the first 4 years, there was 10.5 million Bitcoin that was made. The next 4 years, there was half of that, or 5.25 million, and then the next 4 years, it was half of that, or 2.625 million, and so on. Like every 4 years, there's exactly half of what's remaining that gets mined, and so on. So that asymptotically goes towards 21 million. We're currently at like 18.9 million right now. So we have most of the Bitcoins already mined, but that there are incentives and so on to make it so that it is decentralized, essentially. There's no central controller, and no one can shut it down. There's no single point of failure. So in a way, what I like to say is that Bitcoin is digital gold. It's got the convenience of digital things like the US dollar, like your credit card, like Venmo or whatever like that you want to use. But it's also got the store of value property of gold, and it's actually better than gold because it's got an absolute scarcity, whereas gold has sort of a relative scarcity. So it's very hard to mine gold out of the ground. So the ratio of new gold coming into the market versus the current stock of gold tends to be about 2%. So 2% increase in the amount of gold, above ground gold that exists every year. And that's been historically true for like 5,000 years or something like that, if you average it out. With Bitcoin, it's less than that, and it continues to get less. So it's more scarce than gold is. So it's digital gold, and that's the easiest way to think of it.
I'm curious, a quick follow-up question. It might be a dumb question, but what happens, Jimmy, when we hit that 21 million mark? Mm-hmm. Is the world is the sun not gonna rise, or what happens? I'm curious.
Nothing serious, I don't think. Basically, miners run, instead of on the block reward where new Bitcoins come into existence, they run on fees. So these are transaction fees that are paid by people that are transacting in Bitcoin. Even if I were to send you some money on Bitcoin, you have to incentivize the miner to include your transaction on the page, right? The new page in the ledger, and you do that by paying them some amount of Bitcoin, and that's after all the Bitcoins are mined, that's what they'll run on. In fact, there have been many blocks where the fees were greater than the block reward. So this happens on a continuous basis. The other thing that you asked about was DeFi, and I think what you mean is sort of like the thing that's going on in Ethereum.
Yeah,
And there's an
probably.
excellent article by Alan Farrington and Big Al called Only the Strong Survive. And it is a 48-page masterpiece on what is going on in that space. And you really need to read it if you want to understand what's going on. But basically, what they argue is that DeFi is neither decentralized, it's really very, very centralized, and it is not finance because there's no actual stock of any real value there. It is all like sort of illusory, and it's financial gains on top of financial gains, rehypothecation on top of rehypothecation, loans made from nothing, that sort of thing. It is the worst parts of the current financial system, or the games that Wall Street plays, all the investment banks play, with all of the worst parts of like digitization and like sort of at least those Wall Street firms and so on have some regulation around them, so there are some controls. At least DeFi as currently constituted is much worse than that because there aren't any of those controls, and you get a lot worse behavior because you have retail involved in it. So it is neither decentralized nor finance, but like I see something like Bitcoin as decentralized and finance. So I would say that that's actually more accurate. But yeah, the thing that people call DeFi is just absolute insanity. And as they argue, like it is inevitable that it will collapse and collapse very hard. So I would caution any of your listeners that are into that stuff, go read that article. It is 48 pages. It is long, but it is totally worth reading because it brings to such sharp focus all the issues involved philosophically, monetarily, economically, technically, that a lot of the people in DeFi completely gloss over.
Yeah, no, I will get off this, and that is the first thing I'm going to do is read that article. So I appreciate that. Like when I'm looking at investors out there, and I get asked this a lot, Jimmy. I'm curious your thoughts. Like Jesse, what's the best way to invest in Bitcoin? I mean, just buying a piece of a coin and holding it long term to get returns and stuff like that. Like I'm curious what you think. What would be your recommendation to investors out there?
Yeah, my general recommendation is something like dollar cost averaging. Just buy a small amount on a regular basis, and that will probably be better for you than almost anything else. The thing is, like the current mental model of investment is a complete anathema to like anything that has happened historically. The entire profession of investment advisor or financial advisor didn't really exist under the gold standard because you didn't need it. Just kept your money in gold and it did fine. And you would have more purchasing power every year and so on. And that was normal. What's been corrupted is the monetary system, and it has brought this huge class of quote unquote investors who are really only trying to keep up with the monetary expansion, right? So you get people that are putting money into stocks and real estate as two examples as a way to keep up with the monetary expansion rate. It's really sort of like a fiat job, if you will. It's something that only exists because of fiat money. So the way fiat investment tends to work is that there is usually some level of leverage involved, whether it's so for example, if you're doing real estate, you're buying on 5x leverage, right? Because you put 20% down and you get 5 times the amount of value, and you have 5x exposure. So if this is why like the government tries really hard to make sure that the housing market doesn't crash, because if it does, then everybody on 5x leverage like gets absolutely destroyed, right? Like, and you get like carnage absolutely everywhere. But this is also true to some degree in stocks and many other things where people will take out equity on something else to invest in something else and so on. But that sort of thing, like leverage game, is happening all over the economy. And every time some leverage is being played, usually that means monetary expansion. And this is why governments and everybody else are trying so hard to make sure that the game can keep playing. But Ultimately, what that means is that the fiat system runs entirely on debt. Almost all fiat money is debt, right? Like it's all debt. And rich people have lower interest rates, and poor people have higher interest rates. If you're Mark Zuckerberg, you can get 1% loans, using Facebook stock as collateral or something like that. But if you're somebody that's very poor, you're going to get 34% interest rates on your credit card, right? Like that's the only loan you can get, or maybe payday loans or something like that. But that's how this entire economy is based. It's on debt, and it is horrible for people's character, because what you end up doing is getting whatever you want right now, and you are enslaved for the next however long. And this is not true of just individuals, but companies, governments, they all get what they want right now because they can leverage the hell out of it, out of the monetary system. And they end up enslaved either to the bank or to the people that funded them, or, or whatever, right? Like the powers that be. I think what Bitcoin allows is it allows you to save, right? And this is a much better thing for character. Ask any parent, like, would you rather have your child like get what they want now and have to work it off later, or make them save and get what they want at the end of the saving? Well, clearly the latter, right? So that's the same for us too. Like if you are saving, if you are able to accumulate, this is way better for you and for everything else that you're doing. So instead of buying homes on 5x leverage, imagine if you can like save for 5-10 years and buy the home, right? Like with cash. Then you don't have obligations to a bank anymore. You're not enslaved to the bank, if you will, or enslaved to the debt, which unfortunately is way too common. That's way better. And Bitcoin lets you do that. And that's my real pitch for Bitcoin, is that ultimately it lets you save. It gives you sort of opportunities. The way that you start a business in the fiat world is you go out and raise money, or essentially get loans from people, right? Like you're borrowing lots and lots, and then you have obligations to them. So you have to do what they want, not what you want. Whereas if you save money, then you can do what you want, right? Like you can make decisions based on what you think is right instead of doing what everyone else does. And this was something that was very frustrating to me when I was in the startup world, is that you ended up doing whatever the VC wanted. Didn't really matter what you thought the right thing was. If you thought the company was growing too fast and that you wouldn't be able to hire the right people, or that the market would respond badly to something, it didn't matter because they wanted you to grow at all costs. And that was very frustrating because, like, if you grow slower, you can make this business a lot better. But they didn't want to hear that because they want to get to unicorn status as quickly as possible. But that's what happens, is that you're really enslaved to somebody else when you're in debt. So this ability to save is just enormous. And with Bitcoin, you have this ability to be like, if you save for 5 years in Bitcoin, you'll have enough to start some sort of business, right? Like you don't need to take out loans. And this was the model that was prevalent all through society for thousands of years. It's only in like the last 100 that it's become normal to take out lots of debt and like be up to your debt and up to your eyeballs in debt and owe lots of people money in order to like survive or something. It's so stupid. Yet that's what everyone falls into because that's the water we swim in.
Yeah, I mean, super interesting, and I'm curious if there's ever going to be a day where like people aren't putting their money in savings accounts anymore and getting like 0.0001% interest, and people are just putting it in Bitcoin. I mean, will that be a day? One day, it's super interesting. But you hit on the power of saving and how crucial that is. I just got two more questions for you. I got to hit, and this is such great content. But when looking at, I'm curious for people out there who are thinking about the actual mining process of Bitcoin. I mean, do you support support, I guess, I mean, people who want to go out there, build miners and go about it that way? Or what are your thoughts, I guess, on the exact mining process of Bitcoin? I'm curious.
Yeah, so almost always when people get into Bitcoin, the first thing that they think is, "Hey, I should go mine because that's free money, right?" Like, and then you find out it's not so easy, and procuring equipment is difficult, and your electricity rates at your home are like way more expensive than what China or what someone in Midland, Texas gets. So, you're gonna have to know some stuff, and it's like anything else. Like people think investing is like free money because you're just moving money around and you make money. No, if you actually want to be good, you're gonna put in hours of research and hours of doing all sorts of things, and it's work like any other work, right? Like it's maybe it's a little more fun for you if you're trading in and out of stocks, but still work. It takes a lot of your time, labor, effort, and emotional health and everything else. There's a cost to be paid. So stop thinking that mining is going to somehow magically give you free money. That's what there's no free money. Okay, guys, like that's what every scammer wants to tell you, that you can make free money somehow by doing their system or something like that. That doesn't exist. You work, you make money. That's how it is. I tend to think that working on what you happen to be good at is generally a better strategy than doing something like mining or becoming like a trader or something like that, which a lot of people are tempted into. Whatever whatever you're good at, whatever your particular gifts or talents might be, and the market pays for, that's what you should be doing, because that, like, by definition, that's like the most efficient use of your time, instead of spending time trying to figure out how to do mining or whatever. But there are good reasons to go mine, right? Like if you want non-KYC Bitcoin, that's a very good way to do it, right? Like you mine it, it's fresh Bitcoin, it has no links to anything else, and you get it. And that's great. Like that's a wonderful way to make that happen. But no one else like really like there aren't really like monetary reasons to do that. I mean, like there can be, but you're going to be working, right? Like people tend to think you're not going to work and you're going to make money or whatever, and these are what I call rent-seeking jobs that everybody wants. They exist in the fiat world. Like you can be a bureaucrat that does rubber stamping all day and fleece the government out a lot of money, or like even a company or something like that. But those jobs don't exist in Bitcoin. Everything that you do has to bring value. And if you're not bringing value, then you're not going to make money. And if you're not working, you're not going to bring value. So that's unfortunately why people think about mining. That's not the case here. You're going to have to work. And I would suggest that you work at what you're good at instead of what you have no idea about.
And I just love it. I just got to quote you, Jimmy. There is no such thing as free money. You heard it here on Wealth Science from Jimmy Song. So true, dude.
Unless you're the Fed, but that's a whole other thing. Yeah.
The last thing I wanted to hit you with before we wrap up, Jimmy, obviously nobody has a crystal ball, but I mean, you've been in the space for about a decade now. I mean, where do you see Bitcoin and cryptocurrency as a whole? I mean, 2 years from now, 5 years from now, 10 years from now? I'm curious, the future here within the next decade, as you lived it for the last decade. What does the next decade look like in your opinion?
Well, I mean, the broader cryptocurrency industry, I have no idea. I mean, I think it's worth zero. Like they're scams. It's unconscionable, the immoral things that they've all done and made completely normal. They printed a ton of tokens for themselves at the beginning and then sold it to people on like completely false premises with no investor protections whatsoever. Like this is the norm, and people think that that's okay. In any other era, they would have been all laughed out of the room. But in this era, somehow, with enough, venture capital backing, it's somehow considered okay. It is not okay. It is completely immoral. It is theft of the highest order. It is no better than fiat. So I have no interest in thinking about that. I think they should be worth zero. Whether or not they get there is another question entirely, because we still have a lot of suckers that think, oh, I can make money for free. Like we were mentioning, there is no free money, right? Like it's not happening. You're either paying with your loyalty compliance, or you're actually working, whether you think of it or not. A lot of people that own these coins are marketing it constantly on Twitter. What do you think you're doing? You're working for them. That's what you're doing. and you're probably getting paid less than like the wage that you would receive at McDonald's. So that's one aspect of what I expect. But as far as Bitcoin goes, the long-term implication is the long-term value prop is really, really simple. There's a fixed supply for 21 million. And there's increasing demand. The only release valve then is price. That's it. And how fast that goes up, or when it goes up, and whether it goes up at a steady rate or is volatile or whatever, it's all really not of consequence if you're holding over the long term. And that's what that's what it's really useful for. When you're able to hold it for the long term is when it's really useful. And over 5 years, any 5-year period, no one has ever lost money in Bitcoin. And in fact, most of them have done fantastically well. And it's a excellent savings vehicle, and dollar cost averaging is an excellent way to do it. I would suggest that you save in Bitcoin, and I think a lot of people will sort of figure out that power within the next 5 to 10 years, and there will be a lot more entrepreneurs that will be like, hey, you know what? I see this opportunity. I think I can make money doing this. And if it's your own money, you're going to be a lot more careful with it, right? Like unlike a lot of the startups I was at, where they wanted to get rid of their money as quickly as possible. It was insane what stuff they were spending money on. If you're starting your own business, you're most likely going to want to be cash flow positive instead of losing money year after year for like a decade, like Amazon did. That's not going to be normal. You're going to want to make money, and I expect businesses like that to come more online. And of course, if they're making a profit, that means that people really want it. So these are going to be really good goods and services, not cheap crap that you get from all these like discount leaders or Cantillon winners or whatever you want to call them.
Yeah, I mean, so many great notes in there. I mean, if I could turn the clock back 10 years to 2011, I mean, you said it in your intro. What's the one thing I would do different? I'd buy more Bitcoin. So, Jimmy, I can't thank you enough for coming on today and providing this incredible content. And it was just awesome to hear your story and all of the incredible, amazing things out there about Bitcoin. I'm curious. I mean, I don't even, if people want to reach out to you, I mean, do you have a website or anything like that, or anything, a consulting service or anything, if people want to follow up with you or anything like that?
Yeah, so I have a lot of I have a pretty large social media presence, so you can follow me on Twitter at Jimmy Song. Also have a newsletter, jimmysong.substack.com. It's called Bitcoin Tech Talk, and it focuses mostly on tech, but I have a lot of economic commentary on there. My latest piece is called "Why Altcoins Are No Different Than Fiat." So I encourage you to go read that. And it basically makes the argument, hey, like Ethereum is basically fiat money. And I don't understand why people are putting money into that. Yeah, I'm happy to, consider whatever opportunities, but generally I'm very busy during bull market. So, those are some ways to reach out to me if you really want to.
Awesome. Jimmy, thank you again for your time today. I really appreciate it. Again, we're middle of a bull market in Bitcoin. You're one of the busiest guys in the world right now. So I appreciate it. And for you to take, an hour today to record this means a lot. So thank you again for your time. I really appreciate it.
No problem. Thank you.
Hey, thanks again for listening to the Wealth Science Podcast. Take some time to subscribe and leave us a review. It really is the basis that helps us continue to bring on amazing guests each week. We have another incredible story to share next week, and I'm certain it's going to add value to this community. Please do not hesitate to reach out if there's anything I can do to help you in your journey of attaining financial freedom. Thank you again for listening, and we will see you next week.